This paper is paper 11, October, November 2020, IGCSE Accounting, multiple choice question. Okay, the first question. A trader prepare financial statement each year. What do this assist the trader to do? Financial statement, we can know the profit, we can know the asset, liability, and capital. But normally these two are the financial statement in our syllabus. First, calculate the amount owed to the credit supplier. This one you can use the trade payable. Calculate the cash drawing. This one you can use the capital account or cash account. Maybe this one can find the cash drawing. Check the bank statement balance. This one you can use bank reconciliation statement. Making decision about the future. Using this financial statement, if your business is doing well, then you have to make decision to expand or how to make it better. So that is more accurate answer for it. The following balance appear in Hussein book. Feature, inventory, trade receivable, trade payable, other receivable, other payable, loan to Imran, bank overdraft. What was the total of the liability? So liability, this is asset, 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 liability, asset, liability. Loan to is asset. Loan from is liability. So this is asset. Loan to. Bank overdraft is a liability. So they want total liability. So this is a liability. This is a liability. This is a liability. So add it up all 4,005 plus 300 plus 1,004. So we get 6,200. Next, move on. Question 3. This is Paul account under the book of Mary. So debit, that means this is a trade receivable. Okay, on the statement, which one is correct? So 1st April, Paul owed Mary 90. So this one is correct. 14th April, Paul sold goods. This is not. This is a Mary sold the goods to the Paul. So this is wrong. On 21st, Mary returned goods. This is should be Paul returned goods to the Mary. On 30th, Mary owed Paul. So this one should be Paul owed Mary. So this is wrong. So the answer should be A. Okay, question number 4. Which business document is used to update the cash book for standing order payment? Standing order is through the bank. Okay. So what is the document that we can use in order to update our cash book? When end of the month, the bank will send you a bank statement. We can use the bank statement to do the recording for the standing order. The check counterfoil is a small checkbook that the business will keep for future reference for the payment made. Pay-in slip is a slip that we pay, then we can keep it for the recording also. Receipt is a money that we go to make payment. People give us the receipt. That is also the document can be used. But this all you can use for the update in the cash book. On 1st March 2020, the bank column of cash book has a credit balance. So your cash book bank has a credit balance 290. During March, check total 580 were received. That means received 580 and total 601. This is a payment made. Bank charge of 12 incurred in February were also entered. So this one $12. What was the balance of the bank column in the cash book on 1st? So we calculate total debit credit first. 290 plus 610 plus 12 minus 580. So we get a balance carried out in here. This is for the 30th March. The question asks for the 1st April. So this amount will move to the credit side. 1st April, balance what now? 332. So this is sitting in the credit side. So the answer should be credit balance 332. Okay, next question, 6. Zingy prepare a trial balance. The total of debit is 225,750 and the total credit. So let's put in, so debit, credit. Here is 225,750. Here is 225,250. So this one more, debit more than, so your suspend account should be in the credit side to balance the amount. Okay, what could explain the difference? Why cause this difference this side more than the credit side? Bank overdraft 250 was recorded in the debit. Okay, balance. So when you have putting in here debit balance, so this supposed to be credit, you go and put debit. This will cause the amount increase by 500. Okay, so the number 6A is correct. Inventory 500 was included in. So when it's in the debit, inventory is nothing wrong. So don't do adjustment for this one. Purchases return 250 was included. This one, purchases return should be in the credit side. So nothing wrong with it. Sales return 200 was in the debit balance. Sales return should be in the debit balance. So nothing wrong with it also. So the answer should be A. Rent received from a tenant was debited to the rent account and credited. By right, this rent received should be debit cash, credit, rent received account, rent receivable account. Which type of the error has been made? Under this all, this will not affect the trial balance. Commission is talking about the same class, but wrong account. Compensating, that means there's no more than 2 error offset each other. Complete reversal should be debit become credit. Credit become debit. That is complete reversal. Principle is that wrong class, okay, wrong class, but correct amount and correct side. So there is a principle. So the answer should be complete reversal because this is the wrong side already. Debit become credit, credit become debit. A computer system purchased from S Computer for 1,430 has been incorrectly recorded as a 1-3 and was entered in the stationery account instead of the office equipment. So first of all, this amount recorded in the debit stationery and the amount is 1,340 and credit the this one from Acer Computer 1,340. This is correct. This is the wrong. Okay. And then now the next is that the stationery is wrong. So we have to reverse it up. So we will debit the office equipment. This office equipment suppose is 1,430. And now we have to reverse the stationery. 1,340. And these two differences, which is the $90, which is this one short of $90. So we credit Acer Computer. So this should be the adjustment for it. So the answer should be donkey. Okay, now let's move on. Cat calculate her draft profit for the year, 28,400. She later discovered the following. Rent prepaid by Cat was understated. So by right, we should debit other receivable and then credit rent. Okay. Closing inventory was understated by. So when closing inventory understate, cost of sales overstate, cost of sales overstate, gross profit understate, profit will be understate. So what was the correct profit for the year? So draft is 28,400. When we credit the rent, it will reduce the expenses. So profit will increase by 1,000. And then closing inventory understate. When we adjust the closing inventory become higher, cost of sales will reduce, gross profit will increase by 1,005. So these two should be plus. So 28,400 plus 2,005. So we get 30,900. So the answer should be donkey. Okay, now let's move on. Okay. Question 10. What will not be included in the sales ledger control account? So just go through the simple sales ledger control account. Balance breakdown, credit sales, sales return, bank, discount allowed, irrecoverable debt, contra entry, balance carried out. This is standard item. Cash sales recorded. This one will not recorded in the sales ledger control account. This is referred to the credit sales. Check received from the credit customer recorded in the cash book. So this is the amount for the bank. Goods sold on credit recorded in the sales journal. This is the one. This is for the C. Okay. Irrecoverable debt return record in the journal. This is the irrecoverable debt return. So the answer should be A. Next question. 11. A trader debit the cost of the, okay, this is a expenses. This is a non-current asset. So they recorded into the office equipment. That means non-current asset will be overstate. And this one debited the cost of to the, so mean expenses understate. Expenses understate, profit will be overstate. So the answer should be A. Okay, now next move on. Question 12. A trader used the reducing balance method of the depreciation. What effect of this has over the life of the non-current asset? So for the reducing balance method, depreciation first year is the largest amount. Over the period, first year, the largest amount. Over the period, it will getting lesser value for the depreciation amount. So what is the effect of over the life? Depreciation charge even this is a straight line method. Okay, this is straight line method. More depreciation charge, this one should be less depreciation charge. More depreciation charge in the, sorry, this one is talking about early year. This is early year, this is later year. More depreciation charge in the early year. This is the one correct. More depreciation charge in the later. This is the should be lesser. So this should be lesser year. The non-current asset being revalued is this revaluation method. Revaluation method. So the answer should be B. Okay, now let's move on. Rashid provide the following information on 31st December. Machinery at cost 52,000. Provision for depreciation of machinery 23,000. Depreciation for the year is calculated at 20%. After the statement of financial position was prepared, it was found that the machinery repair cost 2,000 has been debited. So that means that expenses understate debited to this one is a non-current asset overstate. Okay, what is the correct balance on the provision for depreciation account? So let's calculate. Starting, I take 52,000 and on cost, I times 20%. I will get 52,000 times 20%. So I get this amount. Okay, so this is the amount that I get. 52,000 times this one. And then after this adjustment, after the adjustment, 52,000 minus 2,000. So left with 50,000. 50,000 times 20. So I get 10,000. So the differences is 400. So what is the correct balance on the provision for the depreciation? So my depreciation should be lesser by 400. So in this case, I have to minus 400 here. So 23,000 minus 400. So I get 22600. So this one, the answer should be B. Okay, now let's continue. 14. At the end of his financial year on 31st August, the trader has prepaid insurance. So prepaid insurance is a current asset. Okay. How will this appear in the insurance account and the statement of financial position? So the double entry will be debit, other receivable, and credit insurance. This is the adjustment for the prepaid. So insurance account, you will have a asset. This is a current asset in the debit side. Debit balance, credit balance carry down. So you will have a insurance balance carry down here. So credit balance carry down, correct. Credit balance carry down, correct. But this carry down will be sitting into here, become a current asset. So the answer should be A. Okay, now let's move on to the next. Okay, 15. Okay, Harry financial year ended 30th. She provided the following. So this is information provided. Which journal entry was made on the 30th September? So here rent received. Okay, we open the rent receipt account. Rent receipt account. So on 1st October beginning year, rent receipt accrued. This is a balance brought down 480. During the year, rent received, that means this is a bank amount 6,008. On this 30th end of the year, rent received in advance. This is a liability balance carried out 720. So now our amount to adjust will be the income statement amount. So the double entry will be debit rent received credit income statement. So this is a asset. So we take bank amount 6,008 minus 480 minus 720. So we get 5,006. So the answer should be debit rent received Debit rent received, credit credit the income statement. So the double entry should be answer C. Okay, now let's move on. 16. The balance in the book of Jason on 1st July 2019 include the following. Trade receivable at 30th June was, okay, this is beginning year, this is end year. Okay, of which 500 should be written off as. So this one have the additional information. Jason want to maintain his provision for doubtful debt at 2% of trade receivable. So we calculate this amount first. Take the 58500 minus 500 times 2%. So we get 58,000 times 2 divided by 100, which is the 1160. So this is the information that we get. What was the change in the provision for doubtful debt? So the change of the provision for doubtful debt, balance worked out is 1284 in here. End of the year balance carried out is 1160. So we will have a decrease. So this decrease, the differences will be 1284 minus 1160. So we have 124. So this amount decreased by 124. So 124 is a decrease in the provision for doubtful debt. Okay, now let's continue. In 17, Nima sell two products, product G and product H. The following information is available about his inventory. So let's see, this is valuation of inventory. It was found that 100 units of product G damaged unsellable, so have to minus 100 units. What was the total value of inventory? So this is lower, so we choose the lower. This is the lower. So for this one, we have to take 900 times $2. This one we have to take 800 times 120. So 1,008, 800 times 1.2, we get 960 plus, so we get 2760. So the answer should be A. Okay, now let's continue. 18. Which item will not be shown in an income statement prepared by service? Service do not have the inventory. So there is an item that you need to take notes. When you do not have the inventory, you do not need to prepare the cost of sale. They say that which item will not be shown. So this is one of it will not be shown. No gross profit, since that no cost of sale, you will not have gross profit. Profit for the year, yes. So service has revenue and the expenses to get the profit. Wages paid to the employee also will show as expenses. So the answer should be 1 and 2. And now next. '19. A trader provide the following. So capital, beginning of the year. Motor vehicle given to the business by the trader. This is also capital. And then personal expenses paid out of the business. This is a drawing. This is additional capital. Additional capital. Cash drawing. This is also the drawing. And so now they calculate. So this one have to plus, minus, minus. So 52,000 plus 3500 minus. So the answer 53500. So the answer should be C. Okay, now let's continue. Question 20. John and Mark are in partnership. Profit and loss are shared in the ratio 3:2. John is entitled to an annual salary of 12,000. The profit for the year is 52,000. How much would be credited to the partner current account? So let's recalculate. The profit for the year is 52,000. This is profit and minus salary. Okay, so we get 40,000. So 40,000 shared by John and Mark with the 3 and 2. So John will get 40,000 times 3/5. 40,000. So here get 24,000. Here we'll get 40,000 times 2/5. 16,000. So these two add up 40,000. Now for the John entitled salary. So John will get another 12,000. So which is total John is 36,000. So John 36,000. Mark is 16,000. So the answer should be donkey. Okay, move on to the next. Okay, question 21. A partnership maintains both current and capital account for each partner. An inexperienced bookkeeper prepare the following account which contain an error. This is capital account. What should be appear as a closing balance on the loan? Loan made to, this one should go to the loan account, not under capital. This one should go to the appropriation account under the current account, transfer to the current account. So these two should not be appear. Okay, in this case, these two are wrong, then this amount should be 100,000. So it should be 100,000. Okay, now let's continue. Question 22. Z Limited provide the following information. 5%. What was the equity? So equity section under the company account. This is a non-current liability. This one general reserve, issue ordinary share capital, retained earning. This is the equity section. Short-term bank loan, this is a current liability. So take these three add up. 25 plus 300 plus 75. So it's 400,000. So the answer should be B. Next, move on. 23. Which statement about the preference share is not correct? So preference share do not have wording right. This is correct. They were not correct. Preference share receive fixed dividend. This is correct. Preference share has a prior claim before ordinary in the event of liquidity. Yes, this is also correct. Preference share receive their dividend after. This is before the ordinary. So the answer should be donkey. A sport club was formed on 1st September 2019. What may appear in the receipt and payment account for the year ended 31st August 2020? Formed on this is the first year. Okay, end of the financial year. So receipt and payment talking about like a bank. We have the closing bank balance. Okay, we may appear for the year ended closing bank balance. We should have closing inventory. This is nothing to the inventory. Receipt and payment is like a bank account. Depreciation is non-cash. It only appears in the income and expenditure account. Subscription in area. Subscription in area will appear in the statement of financial position as a current asset, and also under the income expenditure as a part of the income for the subscription fee. So the answer should be A. Okay, question 25. A manufacturing company provide the following. They want prime cost is a raw material, direct wages. This is factory overhead. This is supervisor cost, also factory overheads. This one factory rent is also factory overhead. This one is also factory overhead. So only two items for it. So 186 plus 75. So it's 261. The answer is B. Next question, 26. A manufacturer work in progress at started of the year was valued as 850. At the end of the year, it was valued as 10,200. What was the effect of this increase of the cost of production? At the end, the cost of sales. Okay, here, work in progress starting is this one, end of the year. So work in progress, we have to take opening minus closing. So opening is 850, and then this one is at the minus. So 850 minus 1022. So 850 minus 1022. So we get 9350. So this is the decrease. So work in progress minus, that means cost of production will decrease. When cost of production decrease, will transfer to the cost of sales. Cost of sales also will decrease. Both also must be decreased. So the answer 26 should be A. Okay, now next move on. Question 27. A trader make the following forecast for all the business or for the next financial year. Average, reoriented inventory. What are the forecast sales for the next financial year? So we use this information. Okay, cost of sales divide average inventory. We get the rates of inventory turnover. So cost of sales we don't have, but we have the average inventory is 80,000 and rate of inventory is 6. So cost of sales will be 6 times 80,000. So this is the cost of sales. Markup formula is a gross profit over cost of sales times 100%. So they want to have the sales forecast. Sales minus cost of sale, get gross profit. So here 25%, here 100%, sales will be 125%. And our cost of sales is 480. Okay, so now we want to find this one. So we can take the 480,000. Okay, 480,000 divided by 100 times 125. So we get 480,000 divide 100 times 125. So we get 600,000. The answer should be donkey. Okay, now next move on. Kim trade payable turnover increase. Trade payable turnover is taking the trade payable over credit purchases times 365 days. So Kim customer took longer. This customer, this is supplier, this is wrong. Kim credit purchases increase. When this one increase, this one no change, then should be decrease. But this one they say increase. Okay. Sales revenue nothing, so don't take. Kim took longer to pay her credit supplier. When this one is increased, means that he took longer time to pay the supplier. So this one should be donkey. Okay, now let's move on. 29. A company provides the following information about the rate of inventory turnover. Year 1, year 2, year 3. What will be explained in the change? Rate of inventory turnover is taking the cost of sales divided by the average inventory. So this one getting more. Getting more means that this one increase, this one should be decreased. So what would be explained change? Cost of sales is decreasing? No. Inventory is increasing? No, because here should be down. Sales volume is increased. Sales volume is increased. Yes. Selling price, when sales volume increase, this cost of sales will increase. Selling price, nothing to do. Okay, don't think about this. This is talking about the cost. Okay, so this one possible answer will be C. Now, next. A company provide the following information about the current. So current ratio getting higher. This one is getting higher. What will be the change? So current asset to current liability. This one reduce, this one possible increase. Then cost, this one increase. Inventory is decreased, no. Other payable is increased, no, because this is decreased. Other receivable increased, yes, possible. Trade receivable are decreased, no. So the answer should be C. Now let's continue. 31. A trader want to improve his gross margin. How can this be done? Gross margin is that revenue minus cost of sales divided by the revenue times 100%. So want to increase, that means this one should be increased, this one should be decreased. So this one increase, this one will increase. Reduce administration expenses. This is the expenses, nothing to do with the gross profit margin. Reduce depreciation. This is also expenses. Reduce rate of cash discount allowed. Cash discount is under the expenses also. This one, trade discount. Reduce the trade discount allowed. This one, when reduced, revenue will increase. This one, revenue increase. So the answer should be donkey. Z has depreciated his machinery at the rate of 20%. Okay, using straight line method. Okay, straight line method, taking this one times 20%. So 30,000 times 20% will be 6,000. Okay, on 31st December, Z was considering calculating. This one, he want to change the method to the net book value. So net book value means reducing balance method, which is taking the net book value times 20%. So we get, which is 3,006. So which statement is correct? So he want to change in 2009. Before that, he used the straight line method. So what is the correct one? Okay, let's see. Come to the change of the method unless give a better view. If no, you cannot simply change the method. So you should apply consistency. So if we apply consistency, this should be the amount that we charge. So the answer should be C. $33. The financial statement of a business are prepared on the basis that it will continue to operate for many years into future. Many years in the future, this is going concern. Okay, answer should be going concern. Business entity is talking about separate recording for the business and the owner. Money measurement is talking about the value to be recorded in the book, must have the value, which is have the monetary term. Realization is talking about the legal entity, a legal title transfer to the buyer. So the answer should be B. When Marina opened a business, she purchased a staple for the staple. Normally we treat it as a stationery. She recorded this as office expenses rather than office equipment. Which accounting principle did Marina apply? Stapler is the cheaper cost and value is very low. So the size is not insignificant to the business. So we call materiality. Consistency talking about the method and or the rate. Historical cost is based on the original purchase price. Prudence is to avoid the profit or the asset overstated. So materiality is talking about the value recognized in the asset or as spent on. 35. Which is the not and aim of international accounting standard? To ensure accounting standard in the different agree, yes, to establish an organization to set standard in every country. It's not the organization, it's just a guide for the organization to follow it. To make it easier to compare, this is the purpose, easier to compare the financial result, to reduce the variety of the accounting practice worldwide. That is the purpose of the international accounting standard. So this is more toward not the main reason for the international accounting standard. So that's all for the question for this paper.